So let's dive straight into it. You probably clicked on this video because you have observed how much the real estate market has gone up over the last few years and you don't want to miss out. I would say that it's very reasonable of you to feel that way. Because when you look at the markets like Adelaide or Western Australia with 50% gain in just 1 year, it's hard not to pay attention. And you're confused too. You probably don't even live in these regions and you want to know if it's worth investing interstates or is it better to invest in your own state? Well, that's why in this video, I'll reveal to you my ranking of the top states to invest in Australia and the reasons behind each one so you can decide for yourself which one suits you better. I'll also talk about my criteria behind each ranking, and lastly, I'll discuss the potential events, important factors that might impact the returns on investment for each state. Firstly, let's discuss the criteria I will use to evaluate and rank the states, and there are 4 of them, being population growth and demand, economic growth and employment opportunities, third one being affordability and rental yield, and lastly, housing supply. Population growth and demand focuses on mainly the annual population growth rate of a state. Therefore, states with higher population growth will tend to have higher housing demand and increasing property values and rental demand. The second criterion is economic growth and employment opportunities. With this criterion, we are evaluating the local economy of a state, mainly in terms of GDP growth and unemployment rate. A strong economy with increasing demand of employment in key factors like mining and tech will attract more people to migrate, thus increasing the property value of that state. The third criterion is affordability and rental yield. What this includes are high rental yields that indicate strong cash flow potential for properties in that state. The indicators we use are median house prices for each state, rental yields, and housing affordability indices. The fourth criterion is the housing supply, and with this, we are looking at the inventory of properties for each state. An oversupply can lead to falling property prices and higher vacancy rates, and vice versa. The last and final criterion that I have reserved talks about where in the property cycle we are. Now, the reason why I want to emphasize this is because there are downsides to the previous criteria I've mentioned. They are all lagging indicators, meaning by the time these indicators have signaled us a state to have great potential, we would have missed the initial run-up already. Therefore, understanding the cycle and where we are in it, however, will allow you to position yourself before the bull run starts for each state. For example, Sydney and Melbourne tend to have the biggest growth in the first half of the cycle, which we have passed a long time ago, while Perth and Adelaide are the winners of the second half, as we have seen. Therefore, I will take this into consideration while discussing each state later on, so you have a full view of both leading indicators like property cycle and other indicators like I've mentioned before. Now, let's go to the juicy part you've been waiting for, the top Australian states that can make you money. Starting with the first one on our list, Perth. Perth has seen one of the best and biggest growth in Australia, and in the last 1 year alone, Perth has seen an 18.8% increase, with its top performing suburb, Vivitch, recording a 40.9% increase in just over 1 year. Now, what are the reasons behind such strong growth? Population growth and limited supply. Now first, let's talk about limited supply. Regarding the supply, this is very evident in the fact that recently in September 2023, there were only 5,131 listings, down from 8,000 in the same week the previous year, indicating a very tight supply. And when you look into the population growth, we have a very strong one. Perth has seen one of the highest one of them all, driven by increased investment and employment in the mining industry. And with Perth, it is a very big regional town that rises and falls based on the investment into the mining industry. And since we are still in the uprun of the commodity cycle and the property cycle second half, which Western Australia is at the center of, we do still expect quite a lot of growth left from Perth until the end of 2026. Now let's move on to the second state on our list, Brisbane. In the last 1 year, the city has seen an average of 17.2% gain in price, and this is all due to a strong migration as a result of affordability issue with other bigger states. Specifically, 28,500 residents have migrated to Brisbane, with a big proportion from New South Wales. And in 2024, Brisbane's population reached approximately 2.5 million, marking an increase of 31,950 residents, or a 1.28% annual growth rate. Not only that, Brisbane also has a very tight rental market right now as well. As of October 2024, Brisbane's vacancy rate is only at 1.1%. This is extremely low when you compare them to the likes of Sydney with 1.8% and Melbourne's 2%. And the same applies to rental yields. Brisbane has a very high rental yield. It's around 4% compared to other cities like Sydney's 3% yield. And when you look at Brisbane's supply, you can see that it has a very similar story to Perth. They are both facing severe listing shortages, which explains their housing booms. This shortage is also explained by the second half of the property cycle, which I mentioned before, where people are coming from bigger cities like Sydney and Melbourne who are coming to Brisbane and Perth to buy up the supply due to affordability issues back in their own cities in Sydney and Melbourne. And also, it's also in the second half of the property cycle where smaller cities like Brisbane and Perth thrive. Therefore, with low vacancy rate, increasing population, migration, supply shortages, and high rental yields, Brisbane is looking like a prime candidate for the top state right now. However, there is a reason why it's not number one, and that's because we've seen rental yield falling in the last 2 years, which indicates that there's less and less value for investment in Brisbane and that investors might be overpaying there. And this is in alignment with our forecast for the second half of the property cycle, where right now, we'll start to see the growth of Brisbane slowing down, potentially peaking around end of 2026. Now, the third city on the list is Adelaide. Adelaide has a very similar story when it comes to migration, as I mentioned before. Additionally, its affordability is what keeps it up so high on the list, with properties costing an average of $800,000 compared to Brisbane's $1 million. And that's why in the last 1 year, the city has seen an average of 16.7% gain in price. However, with the increasing trend of people moving to Perth and Brisbane, this might take away some of the gains from population growth in Adelaide. Now let's go to our number 4 city, Melbourne. Melbourne and Sydney, as I have mentioned before, tend to have big growth in the first half of the cycle, which has already passed. We are now in the second half of the cycle, which growth slows down. For example, in the last 1 year, we've only seen a 2.3% price growth for Melbourne, compared to the likes of 16.7% from Adelaide and 17.2% from Brisbane. And the main reason for this comes from the supply and listings rising in the last few years as shown here. Also, combined with a higher and increasing vacancy rate of around 2%, Melbourne is not looking too bright for this year and next. We will have to wait and see if Australia follows suit with the US interest cuts, which we think is likely. If that happens and the interest rate drops by 0.5%, we might see an increase in demand for Melbourne properties and an increase in property prices as a result. However, if no cuts happen, then major cities like Melbourne and Sydney will struggle, but cities like Perth, Brisbane and Adelaide will continue their momentum. Now, our fifth city, very similar to Melbourne, is Sydney. As I mentioned before, Sydney's growth is in the first half of the real estate cycle, and we are way past that. In the last 12 months, we've only seen a 3.5% increase in terms of property price, and demand right now is not very good, and that explains the slow growth in property price. When you look at the top indicator of demand, so the clearance rate, you'll see the picture. There's been a slight downward trend in the past 3 years, and another indicator for demand that we use is affordability, and it's getting worse and worse. As a matter of fact, right now, Sydney has the worst housing affordability within Australia. In the September quarter of 2024, the average loan repayments amounted to 50% of the median family income, marking the highest we've ever seen. Not only are people unable to buy properties due to high prices, there's more supply hitting the market too, suggesting that people wanting to sell and get out of the Sydney market. And that's why in the last 2 years, we've seen an uptrend in property listings in Sydney. So therefore, right now, we don't really see much of a big move for Sydney in the next 2 years. However, as we mentioned before, if an interest cut does happen, that might slightly turn around the market, but I wouldn't expect much, especially given how the cycle works with Sydney performing worse in the second half. And last but not least, the final city we want to discuss is Canberra. And this is probably the most bearish forecast we have among all states and capital cities. In 2024, Canberra's housing market experienced only a 0.3% gain, the lowest of them all. And the main driver of this is a weakening demand in employment. This is because post-pandemic, many Canberra-based employees continue to work remotely from other regions, leading to decreased demand for rental properties in Canberra. And this lack of demand led to rising vacancy rate. The vacancy rate actually increased to 2.1% this year, the highest among Australian capital cities. And one big contributor to this high vacancy rate is also the significant increase in Canberra's total listings, as you can see here. Therefore, it's not really looking too bright for Canberra, so this wouldn't be one of my picks for the next 2 to 3 years, especially when job opportunities will be bringing people to cities like Perth and Brisbane. Alright, so there you have it. That's my quick summary of my ranking of the Australian states with favorable economic outlook. The thing is, knowing which state to indulge in is not enough, because there is still a whole process out there to follow to pick the right property once you've chosen a state. So watch this video next to see how you can easily do it.